Morning, everybody. My name is Anthony Cooney. I'm the Chief Executive of Fingal Chamber of Commerce. I'd like to welcome everybody here this morning to our Budget 2023 review. Joining us here today, we've got John Fitzgerald, who's the Senior Tax Partner with McInerney Saunders, who are a partner of ours in the Chamber. And John, I think it's a regular occurrence. We have John here to do the review on the budget. So you're very welcome. After John is going to talk us through the main points of the budget from a business perspective. And after that, it'll take 10, 15 minutes. And after that, then we're joined by two panelists. We've got Mary Murphy of the White Sands Hotel and Jeremy Doyle from Foster Bale Tank and Drain, both local businesses within the Fingal region and both very much at the cutting edge and the front end of the business environment, challenging as it is today. So without further ado, could I ask John to take us through the budget highlights or lowlights for 2023. Over to you, John. And you're very welcome.
Thanks very much, Anthony. Great to be back again. Part of me wished I'd be talking about the football last night, but we'll give the budget a go anyway. Like every other year for the past number of years, a lot of this has been flagged well in advance. There's a budget, there's a summer economic statement released, which kind of highlights some of the things that might be considered when budget day comes around. The thing this year is similar to the last two budgets. The last two budgets were in response to a crisis of a different nature, being the pandemic. And this now, instead of the pandemic, it's a cost of living crisis. So it's effectively another a crisis budget. But the good thing is that our economy is performing very strongly. Tax receipts are very, very good. And a package was announced yesterday of about 11 billion, 6.9 of that relating to permanent measures and about 4.1 in relation to one-off support for people to assist with cost of living. Thankfully, like I said, economy has been performing well following reopening last year post-COVID, because COVID is over now, which is great, thankfully. And it's still a little bit reliant on corporation tax receipts from large multinationals. About 10 years ago, I think there was 3 billion received from corporation tax, and last year was about 20 billion. So that's a huge increase, and about half of that 20 billion is estimated to be vulnerable and non-recurring. So this announcement yesterday, the 11 billion, was the largest in our country's history. And introducing such significant measures like this can be tricky to try and get it right. We only need to look across the Irish Sea to our friends in the UK to see the impact of their mini budget last week and what that had on the economy. Ireland, I think, is a little bit more balanced because we don't really need to stimulate the economy. Demand is already strong, so the budget was more targeted towards helping people with the cost of living. In addition, a difference between Ireland and the UK is Ireland is not borrowing to fund any of the measures announced yesterday. In fact, we're running a small surplus, which is great. And again, like I said, Ireland is more targeted to support people in cost of living, whereas it seems in the UK, there just seemed to be a borrowing to fund tax cuts for the highest paid. So they eliminated the 5 or the 45% tax rate for earners over 145,000 or over 150,000. So that's just a bit rich to be borrowing to fund those tax cuts. So in essence, yesterday, from an Irish perspective, we had two types of budget. One was our normal annual budget, and one was the normal annual budget reflecting the domestic situation or employment status. Unemployment is there's no increase. Everything is pointing to our domestic economy being quite strong. And also the second budget then would be in relation to external factors that we have no control over at all whatsoever, such as the price of energy, war in Ukraine, rising interest rates, US economy and the UK economy and changes in regime over there, exchange rates, which again, we don't really have any say in. But thankfully, we're in a strong position to be able to deal with these. So like I mentioned, there were two different things announced yesterday, targeted measures and universal measures. Some of the targeted measures announced were relating to social welfare payments, so double week, increase in living alone allowance, increase in fuel allowances, welfare increases of normal payments of €12 a week from next year, reduction in student contributions. There will be childcare supports, which they're saying on average could be up to about 25% reduction in child payments. And that caps out at $2,100 per child, which is quite significant to a family trying to work and pay a mortgage and pay for childcare. There's also other changes to qualifying criteria for certain other benefits, such as the family income support payments and things like that. So there's a widening of the qualifying criteria, the annual income amount that you need to have to be able to qualify for them. Universal measures that they brought in, covering everybody, don't need to qualify for them. So, well, the first one here, you have to have a child to get the double child benefit tax or child benefit payment. The only qualification there, there's an energy credit of €600, which is very, very welcome. I know, even looking at my own utility bills at home, they've probably doubled. So this €600 will be very, very welcome. 3 €200 credits against the utility bills, which is very, very welcome. And then there were the general tax changes, which can impact everyone as well. So moving on to that, personal taxes, there was the big talking point, which again was probably raised on the flagpole a couple of weeks ago, an increase of 3,200 for a single person to the standard rate cutoff point. And what that means is prior to previously, up to 36,800 was taxable at 20%, with the balance at 40%. They've increased that to 40,000. So an earner who was previously on 40,000 is now going to benefit by about an extra €640 a year. And that's double then for married couples with two incomes. Tax credits as well have increased. Standard tax credits, the personal tax credit and the PAYE tax credit and earned income tax credit, they've all increased by 75 quid. There's no change to PRSI. There is a small adjustments to universal social charge, but these are broadly just to cater for the increase in the national minimum wage for next year. So all in all, when you take into account the increase in standard rate band, the tax credits, and the small adjustment in the USC, I think your normal worker on 40,000 will benefit to the tune of about €830 a year. There's an extra credit then for renting, which is welcome. I think it's not substantial, but it is going to be welcome. It's probably worth about a week's rent for most places here in Dublin. That's €500 for 2022, which you can claim in early 23. And then in 23, it'll be again another €500 claimed in the year and onwards after that. So, you know, for somebody, I mentioned the energy credit earlier. So if you have a single person renting, that's 830 plus 1,000 in the rent credit, plus 600 for the energy credit. That's a nice extra piece to be looking at next year. Other changes in personal taxes, there are a small tweak in relation to what they call the KEEP scheme. This is the Key Employee Engagement Program, and it's been extended to 31/12/2025. And the main improvement here is that the previous problem with this was companies could not buy back the shares. If they were to buy back the shares, the individual would pay income tax on it, which didn't make it very attractive for employees. Now they've made some tweaks after lots of loud noise being made to enable companies buy back these shares to give a liquidity event to employees to pay beneficial rate of tax. And another one that they have extended as well is SARP, Special Assignee Relief Program. Again, this has been extended. What this relief is for assignees of foreign multinationals that have come to Ireland to work. 30% of the excess over 75,000 had been disregarded for income tax purposes. That was the case up until now. Anyone entering into it from next year is going to be 30% over 100,000 will be disregarded for income tax purposes. It'll still be subject to PRSI and USC, but 30% over 100,000 next year is going to be disregarded. The small benefit, this is a very, very interesting one. Small benefit exemption has been increased annually from €500 to €1,000, and it could be payable in 2 tranches. So previously it would be the annual Christmas voucher, or the annual voucher, one for all, or whatever it is, voucher to the value of €500. Now employers can give 2 of these throughout the year, 2 €500 vouchers. So my own view on these changes are to try and assist employers in keeping staff, in retaining staff, and incentivizing staff to stay where they are, and to try and keep people in employment as well. Particularly that keep share scheme, the SARP scheme, the small benefits, and the adjustments to the personal taxes, is to try and help people, give them a bit more money to keep in their pockets. There was no changes to capital gains tax or capital acquisitions tax, despite murmurings over the last couple of weeks pre-budget. The murmurings were that there was going to be a reduction in the tax-free threshold for CAT, or an increase in the amount of CAT payable on certain transactions. But thankfully there has been no changes, and in fact it's a disappointment to myself that they haven't decreased the rates on it. We all know that when Charlie McCreevy changed the rate from 40% down to 20%, 20-something odd years ago, that there was a huge stimulus in the property sector, lots of transactions happening, and in fact it increased the tax take to the public coffers. So I would have preferred to see a reduction in the amount of capital gains tax and CAT, just to stimulate and to assist with transactions. In relation to VAT, they're going to retain and continue the lower rate of VAT on gas and electricity. So that was due to expire. They're going to continue that. And a big one, which I think is going to cause a bit of problems next year, is the VAT rate on hospitality sector. There was lots of talk during the summer about price gouging, hotels trying to get too much money for rates, for room rates per night. And the thing now is that this VAT rate is going to increase from 9% to 13.5% from the 1st of March next year. It doesn't just affect accommodation providers, hotels, B&Bs. It also impacts on others in the hospitality sector, such as restaurants, hairdressers, cafes. And I'm sure that this increased VAT rate is not welcome, particularly when you look in the context of everything else that's happening in their business. In relation to VAT, it's said every year that Minister for Finance and countries cannot dictate changes to VAT rates on their own accord. They have to comply with the EU VAT rate, or the EU VAT directive. In this case, there was a new VAT rate directive in April of this year, which allowed more latitudes to government to change and to have their VAT rates what they're supposed, or what they want to be, depending on the situation. So Ireland has adopted a 0% VAT rate on newspapers and certain health products from the 1st of January next year. So that's quite welcome as well. On to business taxes. There is some tinkering around the edges in relation to knowledge development box. That's going to be extended for another 4 years. This is a reduced rate of corporation tax, half the current rate. So 6.25% on certain types of trading income. And that's trying to attract this, as it calls it, knowledge economy to Ireland. There were also changes to the R&D tax credit. The R&D tax credit, previously there was a delay in refundable tax credit element of the R&D regime, whereas now you can get that tax credit up front in year 1. Those are the changes. The biggest measure announced yesterday to support businesses is what they're calling the Temporary Business Energy Support Scheme. So this is where there has been an increase of 50% in the unit pricing of your gas, electricity, your utilities between 2022 and 2021. The government will repay or will support 40% of the increase on a monthly basis, subject to a €10,000 cap. This is subject to EU approval, but I'd expect it to get a thumbs up from Europe, given what it's aimed and what it's targeted for. And two of the main things here is it's going to be administered by the revenue commissioners, and the main condition is that you need to be tax compliant to get this, to qualify for this. So we all saw during COVID that the revenue reacted very quickly, changed their systems, got an awful lot of money into businesses' hands to enable them to continue operating, to retain employment, to support employment. And this is another one of those things where revenue will administer this and allow the funds to go back. The only thing that I see, or the only problem area I see with this is government or businesses still need to fund that 60% differential on the increase. And where you take into account that a lot of smaller businesses may have tax debts warehoused, that 60% increase that they have to fund on their utility bills, and they must remain tax compliant, and they're going to have debt warehousing bills falling due from the 1st of January next year. It could cause problems from a cash flow perspective for a lot of smaller businesses. Two other things to mention on business taxes, on corporate taxes. The main corporate tax rate, again, reiterated for the 20-something year in a row that it's staying at 12.5%. The only thing that he did mention was the minimum effective tax rate of 15%, which could be coming in once it's approved multilaterally by everybody. So this is an international initiative where certain large organizations with turnover in excess of 750 million will be subject to a minimum of 15% tax. In relation to property, there's a few items of note on that. From a tax law perspective, there is no deduction allowed for pre-letting expenses. In the budget last year, there was a change to enable landlords claim a deduction up to 5,000 euros for properties that had been previously unoccupied for 12 months. Now they've increased that to 10,000 euros for pre-letting expenses, and they reduced the time period to 6 months. So if a property is acquired by a new landlord, they spend time repairing it, getting it fit for occupation, they incur mortgage interest, insurance costs, things like that before they have their first letting. Now they can claim up to 10,000 euros as a taxable deduction, rental deduction. The Help to Buy has been extended. Again, welcome for first-time buyers and those qualifying for that, looking to get on the housing ladder. I had mentioned the rental tax credit of 500 euros for applicable for 2022 and 2023 onwards. There's an interesting one about this Vacant Homes Tax, which is going to be a penalty of 3 times the LPT, where the property was unoccupied for 30 days, less than 30 days in a 12-month period. So I think, I'm not sure what this is aimed towards, but it's not expected to yield a significant amount of money from it. And it's, yeah, I'm sure there's ways around claiming that the property was unoccupied for 30 days. I'm sure people would say, I spent a couple of weekends there and a week here and a week there, and it was 30.5 days, so it should qualify for this. I think it's more targeted to try and get more vacant properties into use. Genuine properties that are vacant, to get those into use. There's a stamp duty that, again, they've extended the refund of stamp duty. So commercial transactions for greenfield sites, development sites, they were subject to a stamp duty rate of 7.5%, and there was a 5.5% refund where the property was developed for residential purposes within a certain period of time. So that has been extended. The biggest cost, or one of the costs associated with development land, is the stamp duty, and it's welcome that this is extended. There are 2 things that he's going to review in the coming year. One is, it was mooted during the summer in relation to a 30% intermediate tax rate. There's going to be a review of implementing that with effect from the 1st of January 2024. And he's also going to review the tax efficient structures such as REITs and IRFs. And this is where 0 tax is paid in certain tax efficient structures, compared to if you're an individual landlord owning a single property, you're paying up to 55% on that. So it's good to see that there are changes there being reviewed. Things that I didn't see, I mentioned one of them was the debt warehousing. I had hoped that he might extend that or expand that, or make some adjustment to debt warehousing to cater for businesses that are viable but are just squeezed from a cash flow perspective because of the increased cost of energy, the cost of retaining individuals, and so on. The other thing is VAT. The 23% rate of VAT, didn't see that changing either, which is a pity. I had hoped that they would do that. So that's about it for now. I'll hand you back over to you, Anthony.
Thanks very much, John. It was like very comprehensive in a whistle-stop manner, because I know it's quite a comprehensive document, the budget. And thank you for the excellent summary. And what I would say, what John has always done for us, is that the summary he gives it, we can all understand it. So, because we're, like I'd say, most people on this call are not from an accountancy background, and a lot of people are, like, obviously involved in business. But if I could move on for a second, just at the end of this, if I could say to everybody on the call, we're going to do a very quick survey. It's going to be up for 15 or 20 seconds. It's a yes or no, or unsure. There's a bit of a choice. Do you think the budget 2023 is good for business? Yes or no? Just so that's all we need. So, and what we'll do is we'll have a look at that. It'll be up for 15 seconds. We'll just see what people's view of it is. And then what I'll do is, as you're doing that, I'll just say we're joined by two panelists here today. We've got Mary Murphy, as I said earlier, from the White Sands Hotel, and Jeremy Doyle of Fostervale Tank and Drain. As soon as we get this, I'll come to Jeremy first, because I know Jeremy's under pressure. He's exactly, I think he's traveling today, so he's very kindly signed in. So I'll come on to you 1 second, Jeremy. We just I'll just get the results of this. I think it's not moving anywhere now, so whoever signed on has done it. It looks at this stage to be very clearly that people are very much positive towards the budget from a business perspective. So the 62%, so 31 people out of 50. We have, at this point in time, we have 70 on the call. So the 50 people who've entered, the 62% of those said it's good for business. 16% reckon it's not, and 22% are unsure. So in case somebody rolls in with an answer afterwards, we can take that as well. But it certainly looks to be a positive budget for business, from what the answers we were getting in here at the first cut. Jeremy, could I come on to you for 1 second, please? But Fostervale and the Shoreline are members of the chamber as well. If I come on to Jeremy, in sort of 15 or 20 seconds, just tell us what you do. So I know what you do, but you just tell us the type of business Fostervale Tank and Drain.
Thank you, Anthony. We're a company based in North Dublin, in Swords. We currently employ 42 people, and we are an environmental business based in, with emphasis on liquid waste management. Our business would be very prevalent and reliant on transport and obviously fuel, diesel and petrol. And so we all our staff, I would say 90% of our staff are all based in the Fingal area, and we've been in business now in excess of 10 years. So that's what we do.
Yeah, great. Thanks, Jeremy. I can stay with you for a second. The point you mentioned in relation to your business is very, how to say, you need you might have just alluded to the fact that like you need transport, because everything you do, you have to get out of your premises to go and do whatever work you got to do. What kind of you hear some kind of horror stories and percentages of increases in fuel costs. Well, we've all seen it when we go to fill our cars on the weekend. So give us an idea of the impact in your business for the increase in fuel.
Well, give you an example, like since I suppose since February, when prices started rocketing, diesel and petrol, it was like a domino effect. Obviously, the situation in the Ukraine obviously didn't help, but I would imagine that's not the only reason why it had a negative impact. We seen our fuel bill, increase by 30%, and as you rightly say, we can't work without our transport. So that is the major impact on our business, because if you we did for a long time kept rocketing and rocketing, and we tried to come to an arrangement with our supplier to have a fixed rate, but they will only do that on a week-to-week basis. So you couldn't get like 6 months or whatever. So they will only do a week-to-week basis. So
Yeah.
so it did have a negative impact. I like it been a bit a shame that the budget didn't. Only the business energy scheme, it was emphasis on gas and electricity, and I saw John was saying that the that petrol and diesel, the rate don't be left until March or April of next year. That is to be welcomed, but it is enough to stimulate, and it's enough it's very hard to say, Anthony. Like we have a good business, and we're growing and employing staff, and so it's good to see that the stimulation there in the budget, but is it enough? Well, we don't know what's going on in the world from week to week. I see that the Taoiseach said that there'll be another energy package in 2023. I suppose from my selfish point of view, I have staff, I have 42 staff, they need to be paid. We need to fuel our vehicles. We have insurance and every other cost that any other business have. So it's watching out for that. And it did. I would like, obviously, to be on the business energy scheme in regard to fuel, but it didn't happen. It's very hard to say, was this business really, really good for business? In my opinion, it was, but did it go far enough? I don't know, because I think today, if nothing changes, it's probably good. It's good for business. It's good that people have more income in their pockets. But when energy price increases, are we going to have to start paying our staff more money because the energy? I know the credit of €600, but is that going to be enough? I don't know. Like it's hard to say. Will that be enough? But I do welcome the measure in the budget. I think the government, they got it there, but they're never going to be to get it right, because people have a John was saying that people want to get stamp duty lowered, people want to get the CAT, the CGT to be lowered. We all want something, and it's not there. So whether enough to help everybody, I think it did help individuals. It helped our employees. Had helped our business. I would like the energy aspect with fuel and all that to be further addressed, but it didn't happen. But do I welcome the budget? I do. I think it was thereabouts.
All right. And one of the things, I was actually speaking with an agricultural contractor during the week, who's obviously very reliant on diesel, and that company is burning 600 plus liters a day, and like they're now pricing jobs on a day-to-day basis. So they want to cut silage for somebody, and like they just won't give a price now until on the day, because they just can't guarantee. Because the fuel cost is the largest part of their costs. And it's very valid that you mentioned that there's nothing seems to be done there. But just on another subject of costs in relation to staff costs and staff retention and recruitment, do you find recruitment or retention, is retention an issue, or have you got
I tell you, it must be something to do with the economy, because I'm primarily responsible for recruiting staff. And I found in particularly the last 2 years, it's very hard to recruit staff because they're just simply not there. Like I would be looking for, say, primarily for say truck drivers that would have a C license and ADR accreditation, and they're very hard to get. I like there's many theories going around as to why there's a severe shortage. Like we had a national maybe it got back to the respective countries, and I don't know if that's the main reason, but all I can say is that from our perspective, that we managed to keep our staff with the reason we managed to keep our staff, but to say we do pay. we pay we pay our staff, and we look after our staff well. I don't mean don't pay, but we look after our staff well, because like any business, staff is the lifeline of any business. You don't have staff or good staff, you don't have a business, in my view. So you got to look after your staff. But when they like if this energy, and this is why I'd be a little bit afraid of, if this energy thing doesn't settle down, like people are going to have to look for more money, because they can't afford to pay, gas or electricity, and more importantly, people should not be without the basic right of having heating and food. Obviously, food has gone through the roof. Like like the standard butter, it's gone up by €1, and it is a worry, and I can understand it's a worry for our staff, because they're looking at saying, well, is there any chance you give us more money? And I said, well, I can't, because I'm not getting it from our customers. I'm trying to pass on the diesel costs to the customer, and the customer just, they just say no, or they bulk purchase. And it's a competitive market, and they could move elsewhere. So we just got to be conscious of that. Because most importantly, we got to retain our staff, and like today we have done that. But it would be a concern for 2023. What's the fallout of this going to be?
Yeah, and if I ask you that, and I know you're a business there now, but do you reckon in the last couple of years, just moving completely left field for a second, in relation to digitalization or portraying your business online or websites, or do you find that as a factor in your business now?
Funny you asked me that. I would I think in particularly in the last 5 years, I would think there's a lot of emphasis on as they call it, social media, because that's where you get a lot of hits on your website, and people know who you are. Like, but I give you an example. We have what they call an ad in looking for drivers in one of those websites, and I happened to ring the guy last Thursday, and I said, "Oh, hi, I'm Jeremy from Tank and Drain," and he said, "Oh, you're the guy from Fosterville Limited." I said, "Oh, that's right, yeah." He says, "Oh, yeah," but he had done his research on social media about us, and liked our business, and like, but thankfully he came into me on Monday, and he fitted what I wanted. So it is important, like, between LinkedIn, Facebook, it is important, and we've been developing our website. Like, if you look at our website 5-6 years ago, it was probably non-existent. Our website now is 100 times better, but it's always ever improving. So it is important. I think it is important.
Yeah. Okay, Jeremy, and I understand you're under pressure, but
no, fine, you're fine.
20 seconds on this one. What's the most important lesson you've learned in business in the last 2 years? 20 seconds.
What the most important aspect of business?
What have you learned?
What I've learned is that you need to keep your staff. You need to keep your staff keen. You need to treat your staff well, and if you look after your staff will look after your business, and they will service the customer. That has really come home to me in the last 2 years. That is key. It's fundamental, and you need to have the right staff in any business. I've been in other businesses in the past. I'm actually a solicitor, and I was in private practice, and I treat staff well, and they treat me well. And I like to think I'm doing the same now with this business, which I've been in for 10 years. So it's key, and I'm sure Mary would say, in her business, in the Sands, it's key. That's important. Look after staff, and they look after you, and they look after your business. So that, and I think that, because I know for someone that trying to get staff and trying to get good staff, it is difficult.
Yeah. Okay, great. Thanks, Jeremy. Thank you very much. if I could come on to Mary here now for a second. Mary's from the White Sands Hotel there in Portmarnock, and it's fairly local to me where I live. I know it well. And Mary, just in relation to the budget for you and what's gone on in the budget, what's particularly welcome or what's unwelcome? And I refer earlier to John's point earlier about VAT. I know that's sitting out there somewhere for February or March of next year. There's a change to that. But what's the view of hospitality and your opinion of the view of hospitality of the budget we've just had?
Good morning, Anthony. How are you?
Good.
The lump sum payments towards the energy costs for the individuals, the €600 over the next 12 months, is definitely going to help people. The energy support scheme for the business will help. But it's the insecurity, I think people are concerned about. Where is it going to stop the increase in prices? Let it be from food to heat to light. It's just, people are scared. Where is it going to stop? The VAT is going to, the 9% increase from the 9% is going to affect the business. But I think a lot of people are scared if they have a little bit disposable income, they're going to say, well, we'll mind it. You don't know what way fuel prices are going to be or energy or.
Well, I think that's what's going to happen in sort of discretionary spend. People are going to say, well, I need money because the gas bill is coming in or the price of fuel for my car is going up. So I need to sort of not, rather than go to the hotel for a beer or something to eat or stay for a weekend, we hold on to it until the next month and see how we get on then. So you'll have it, of course, there'll be part of that. But in overall terms, been quite a broad measure of supports introduced by the government, largely for individuals and businesses. So, like, you know, there's no cap on energy, which is probably wise. We may disagree in certain parts how they've done it, but the last thing we want is an open check. But enough of that about 12 or 14 years ago, and we're still paying for it. But I think it's but just from the hospitality sector, like the energy costs for the hospitality sector have obviously gone through the roof, and you yourselves. Like, I was talking to somebody who's in a big firm in town. It's a legal firm actually, and they were telling me that their electricity bill in July 21 was €21,000. So it's a big firm, and their bill this year in July 2022, albeit with 4% increase in usage of kilowatt hours because there's more people back in the office, their bill was €55,000. So it's 2.5 times what it was, heading for 3. So on your business there, and you obviously see it, like the energy costs, because you'd have fridges, lights, all sorts going on in the air conditioning in the hotel. So is there a single biggest factor that sort of, is it energy? Is it staff costs? What would you think is the biggest single factors facing the White Sands Hotel?
As in costs, it's just right across the board. The energy is the number one thing because that has more than doubled. The cost of products, food has gone up, drinks have gone up. There's another drink increase coming in the 1st of October. Like, this is the 3rd one this year. Like, where it's just, we don't know if we're going to have another one by Christmas. The price of laundry, the price of butter has gone up by €1 a pound. Like, you know, it's just phenomenal. The increase, the price of beef. So do you drop your standard? Do you use margarine instead of butter? But you don't want to do that. It's just the costs, and it's right across. The energy is the number one thing. You can't have no lights and no heat, but it's just a factor of the whole increase in costs.
But the government, and I think in fairness to them, what they're trying to do, yes, there's been an increase in costs, which are large, which are outside the remit of the government. But what they're trying to do is cover off most of the increase in costs. We can't cover off them all.
No, that's very
nearly impossible. So
yeah,
from a business perspective,
will be a big help.
From a business perspective, would you think, like the survey we've done just there said that over 60% of the people who responded said the budget was positive for business in overall terms. Yes, we've got some challenges around the edges of it, but I think largely would it be viewed as largely a positive budget? Like, as I say, we have 60-odd%, 64 or 5% have said It is
Yeah.
positive.
I feel it was a very good budget for the people of the country. And I think it's what they need. It'll keep their spirits upbeat and they'll feel, well, they're being helped.
Yeah. Okay. And so if we take the biggest challenges, let's say, and you've got challenges in relation to probably staffing and recruitment, no different than anybody else. And we're trying to get people in the economy. I think it's a common thread amongst all businesses that, we've got staff challenges, either retention or recruitment. But if you come back for a second, we're just trying to take it in a different direction. If we've got if you've got a challenge at this point in time as an organization, this is the White Sands Hotel, what would it be? What would be the single biggest challenge we've got facing the business now? Is it energy, staffing?
Yeah.
And availability of staff?
Availability of staff, and availability of staff that actually care about the customer.
Yeah, a lot of people would say that if you can get people as the first hurdle across, then it's about training them.
Yeah.
So to get relevant customer service training into them. A lot of people going into these jobs don't have training.
Yeah.
And I hear it in other organizations. So just to move on for a second, in relation to, and again, in relation to transformation of your business in the last year, like I asked Jeremy the point about, digital transformation. I think it's well known that the hospitality sector have engaged with different platforms to sell rooms and so on. What steps have the White Sands Hotel taken in the last year or two in relation to digitalization of your business?
Yes, there would be great emphasis to be on as many platforms as possible for the accommodation end, because people are coming into Dublin Airport from all over the world. So the booking engine that might be popular in England and Ireland might not be somewhere else. So it's to try and cover as many booking sites that you can. So you're getting the word out there that for people traveling into the country.
Okay. Yeah. And if you said over the last 2 years, you've learned something in the business, what would it be? If there was the single biggest learning you've had in the last 2 years, what would it be? Given the fact of what we've gone through.
We're good to be alive and surviving.
That's always a help.
Yeah. As Jeremy said, staffing is a big plus. And it just shows possibly how fragile business is, how quickly it can change through nobody's fault. Not one single individual. Like the COVID was come out of the blue from everywhere, but we just got through with it. Everybody in the whole world suffered. It affected some more than others. But life is fragile.
Yeah. Okay. All right. Thanks for that, Mary. Maybe if I came back to John for a second, just for the end of it. I want to thank Mary and for Jeremy for their input today. John, in relation to the overall sentiment in the budget, it seems to be largely positive from what we can see, which is good. I think we've the figures, I think it's in around 62 or 65% of people who responded here said it's positive. I know from looking at the other analysis last night and this morning, it certainly seems to be reasonably well received by business, which is great. And I think the government have done quite a lot. I'm not campaigning in any party now for a minute, but I think, we crawled through the pandemic, and, there was a lot of support put into the economy and into individuals and into business over the last 2 years. And again, I think they've responded. Now, we do have some wriggle room with surplus in the budget, which is great, which we're in a much better position than a lot of companies in our countries in Europe. So if I asked at the end of it, just John, for you, in relation, what would you think is the most welcome budget announcement for businesses?
I suppose some of it's not really what was announced in the budget yesterday. Some of it is, as you said, the talk and the analysis behind the scenes. Nobody can tell the future, so we don't know what's out there. But from listening to Michael McGrath and from Pascal Donoghue and other government ministers throughout last night and this morning, I think the biggest thing is that there's room for additional measures to be made if circumstances dictate in the future. yeah, there's a surplus there, running a surplus this year, should expected to run a surplus next year. There's about 6 billion in a rainy day fund. So if things change, or if the winds change, from my understanding of listening to government, they're prepared to act again. And this is more, the government measure announced yesterday are more for the next 6 months in the energy side of things. They're more for the next 6 months to suck it and see what way things will work out. Will the energy prices drop? They already have. You can see it, the price of fuel in the pumps. Maybe that will work itself out by next February, March. If not, perhaps they'll introduce further measures, more additional credits, look at widening this temporary measures for businesses, maybe look at seeing what the impact of repayments of debt warehousing is. I think that's the main positive, is that they are prepared to act again in the short term, and that's something that I kind of read into listening to the ministers talk about it last night and this morning.
Just very briefly, I've got one question here. Was there any change to taxation on company electric cars for 23?
There was no changes announced yesterday. They were announced last year in the budget, in budget 22. And yeah, so there's no change yesterday, but there are changes coming into effect from the 1st of January 2023. They were announced last year, and it's to do with the first, at the moment, the first 50,000 is exempt from benefit in kind, and that's being reduced on a phased basis over the next couple of years.
And the one other question we have, John, is if somebody's utilised the debt warehousing facility introduced by the revenue, when will interest be charged on it?
Interest is starting to kick in from the 1st of January next year. The interest rate, if you're qualifying in the debt warehousing scheme, the interest rate would be 3%, which is significantly lower than the normal interest rate of 8 and 10% imposed by revenue. So over the next 3 months, I think they've already started. Revenue are writing to taxpayers who've qualified for debt warehousing to say, let's come to an arrangement around the time frame for making these payments and how long we're going to do it. So you'll come to an individual agreement with revenue through a phased payment arrangement. So that'll happen over the course of the next 3 months, as I said, and interest will start kicking in from the 1st of January.
Excellent. Okay, John, listen, thank you very much, John. And again, I would have to say your summation of the budget is always first class, because you break it down for people like me who can understand it then, because you get sort of a bit of sort of information overload when you watch it on the TV and the evening of the budget. So it's been fantastic once again, and thanks to Owen and the rest of the team there at McInerney Saunders, and thanks to everybody for joining us here today.